I'm Liz from One Side Finance. One of the most frequently asked questions that I receive is, how can I get a cheaper interest rate on my mortgage? We all want to know, so I thought it's a good idea for me to create and share this video with you and explain to you the 6 factors that affect your interest rate. The first one is the loan purpose. Is it investment or owner-occupied? Investment loans generally have a higher interest rate than owner-occupied. Now, your circumstances might have changed though. Maybe a few years ago, you purchased the property truly intended for investment, and now you move into the property. The bank has a quick switch form that you can fill in to switch the loan from investment to owner-occupied, and you instantly get the cheaper interest rate. You have to show the proof that you actually live in the property via the address on your driver license and utility bills. Some lenders have a promotion that they can actually offer an owner-occupied rate for investment purpose. However, this one is a little bit complicated, so you need to contact us and then we can assess whether you're eligible or not. The second factor is the loan repayment type, principal interest or interest only. Interest-only loan, which is mostly chosen for an investment purpose, they have a higher interest rate compared if it's a principal interest loan. Now, there's nothing wrong paying principal interest on your investment property as long as you have done the calculation. We have to justify, and obviously you need to check this with your accountant because we're not a tax advisor, whether it's worth paying the higher interest rate on your investment loan compared with the tax benefit that you have. The third factor is the loan to value ratio, the LVR. So some banks will give you a cheaper rate if you borrow 80% or 70% or 60% of the value of the property. But maybe a few years ago, when you purchased the property, you didn't have 20% deposit and you borrowed 90%. But now, maybe your property have appreciated, hopefully, and we can organize a revaluation for you and determine, okay, maybe you're in the 80% or less bracket and you might be eligible for a cheaper interest rate. The fourth factor is the loan amount. So the loan amount also affects how much is the interest rates going to be. Generally, the higher the the higher the loan amount is, the greater the business that you have with the bank and the greater discount that the bank can give it to you. However, again, every bank has different promotion and they have all different interest rates. So we are here to basically show it to you, if you borrow 500, 700, 750, 1 million, what will be the interest rate tiering going to be. Now, the fifth factor is the variable or fixed. No one knows what the interest rate movement is going to be. So it's important for us to educate our clients the pros and cons for each option. At the moment, there's a lot of promotion on the fixed rate. So it seems like it's so cheap compared with the variable. However, there's no point choosing the cheaper interest rate if you don't know the limitation that you will get from that product. For example, with a fixed rate loan, if you terminate the loan during the fixed period, you will be expected to be penalized by the bank. So you need to know what is the pros and cons for each option. The last factor is the features. So like buying anything, the more features that you have, the more fees that you will pay, or the more expensive it is going to be. So we will go through with you what your ideal day-to-day banking is going to be. Do you need one offset, multiple offset? Maybe you don't need an offset account at all. Loans with an offset account generally have an ongoing fee. So if you are a person that you don't need an offset account, then you might choose the basic product, which has no ongoing fee. But regardless what your circumstances are, and especially if you already have a mortgage, you need to do a home loan review at least once a year. Contact us. We're here for you. We will be able to pretty much, say in 5 minutes whether you're paying too much or not. I hope this video is useful for you, but if you have any questions, please feel free to contact us. Thank you.